This is a day I've been looking forward to for 2.5 years.
Yellow paint. Nathan made the black line.
Where they're busy for about 3 minutes, then 5, then they get a full point.
We dedicate this to these people out here getting rain. What a pursuit is the moneyest reality.
What's up, everyone? Welcome to the Akuma Fund. Today I'll be going over my investing process from the beginning to the end, and it's broken up into 7 parts. And the first part in the process is learn. I spend my days constantly reading books, watching documentaries, watching educational YouTube videos. I've pretty much purged as much as I can. I still spend some time watching crap videos, but I spend as much time of my consumption time learning and doing things like that, right? The reason why is because I feel like you are what you take in, and ever since I've been little, I've loved reading, I've loved learning, and it's an important part in my investing process. From that learning, it'll spark ideas, and from those ideas come companies to investigate. So, for example, I was learning about Lockheed Martin, right? I was watching a video about the F-35, and I was thinking, oh, you know what? Who makes the F-35? So I go around and I look and I see, you know what? Lockheed Martin makes the F-35. What's up with them? What's up with their company? So I investigate more. Well, first I learned a little bit more about the F-35. It's an amazing airplane. It's got crazy It's like a crazy stealth fighter that it's literally any of the modern fighters that we put against it right now, they'll lose 5-1 against it. Like, they can't see it, they can't hear it, they can't, it's insane. It's literally the best fighter airplane on Earth. But from there, you have to think, okay, well, the best fighter pilot on Earth, and these things cost tens of millions of dollars to produce, and they're being sold to all sorts of countries of the American allies. So, you know what? Let me look up more about Lockheed Martin. So, once I started to dive into the company, from the idea, I start to understand the company that creates the product. I want to see what other products they have. What else do they sell? What is their reputation within their industry? What's their brand? What about this industry makes it different than other industries? What sector is it in? What are the risks associated with the industry? For a defense aerospace company like Lockheed Martin, they're heavily dependent on government contracts. If the United States says, you know what, we're going to cut our military budget by 50%, whose revenues and profits are going to get hit by 50%? You guessed it, Lockheed Martin. So you have companies that have different dynamics and have different, obviously things are different by sector, and you need to understand the company and who their competitors are, what game are they playing in. Besides that, you want to learn more about the products. You really want to understand the company. Lockheed Martin is an awesome company. I mean, they make some crazy stuff. They make helicopters. They make tank weapon systems. They make satellites, spy satellites. They make missiles. They make logistical software. They make what else do they make? They make training simulators. They make obviously they make airplanes. They make the AC-130. They make just a lot of the aircraft. They make, I believe they make the Warthog. So you have to understand the company. I mean, why would I invest in Lockheed Martin if I only know about one of their products? What about the other products? Okay, you got to know more. After that, the next part is to look at the company's financials. That is singly the most the important thing when it comes to looking at a company is looking at their financial statements, learning what the revenue growth are, what are their projected growth rates, what are their guidance, have they been hitting their numbers recently, throughout history, how are they going? Are they going at 1%, 2%, 5%, 10%? Have they made any acquisitions? Just all sorts of stuff. You got another really important thing is you got to listen to financial statements. Or not financial statements. What are they called? Conference calls. Conference calls are literally gold because you get to understand management. You get to hear what kind of questions are being asked. Because there's people who spend a lot more time analyzing these companies than I do personally, or anybody does really. If you're just an average investor, you listen to what those analysts are asking. Okay, if they're asking about, okay, so F-35 production might be hampered by I don't know, United States relationships with Saudi Arabia. Okay, so maybe I should monitor that. Okay, United States relationship with Saudi Arabia is good. Okay, well, oh wait, the United States government is the one doing the contracts, not Lockheed Martin. Listening to these conference calls provides so much insight into how these companies operate and what are the kinds of things you should be concerned about with the company. Listen to the conference calls. Definitely.
I want to provide an update on the FY16 DoD budget and a discussion of 2 completed strategic actions.
Some good places to start are like Yahoo Finance, any investing tools you have on your platform. Check out the really basic stuff. What's the PE ratio? What's the forward PE ratio? What has the PE ratio been historically? What's the stock price? How has the stock been performing lately? Am I buying it at a good time? Along with buying it at a good time, well, that's a whole nother topic. What's the current dividend yield? What has been the dividend growth rate? What else is there? What is the assets? What's and a really important one? What's the debt? Is the debt normal for this? Is the debt really high for this type of industry or low for this type of industry? What's the dividend payout ratio? What's the earnings per share? Are there any share buybacks going on? What else? What's the dividend growth rate? I mean, the amount of questions you should ask yourself is vast, and honestly, you can't spend too much time in the financials, and then which is step 4, and then number 5 is the valuation phase. For me personally, number 5 in the valuation phase, there's many ways to go about it. I know Benjamin Graham says what is it, like 1.6 times earnings time? I forgot, but there's many different ways to evaluate a company. For me, I look at specifically what's the dividend, what's the dividend growth, what's the starting yield, how healthy is the dividend, and since I like to constantly be deploying capital, is it a good time to be buying now, or should I wait to buy this company? What a really big factor in that is what is the current PE. For example, if Apple comes down to like what it's at right now, like a 14 PE, I'm going to be excited because Apple is trading at a relatively low PE historically from where it's been. It was 20 PE earlier. They're growing revenues pretty fast. So I like to judge a company really based on PE ratio in combination with growth, dividend growth, and the current starting yield. Then another really important part of valuation is what is the management? Who is on the management team? Do they care about the company? Have they been doing any shady stuff behind the deal? Are they selling? Are they selling the stock of their own company? Right? I mean, there's all sorts of shady things that these people can do. CEOs and board of directors. You really need to make sure that the company you're looking at they're not doing anything shady. And I'm not talking about Elon Musk type stuff where he's like just going on his escapades, because he fundamentally really cares about his baby Tesla, he wants the company to succeed. You want to make sure the management company cares about the company, is invested in the company, are experts in their field, have not done anything stupid lately. I mean, you got to make sure that the management team is top tier, and below that you have to make sure that the engineers, who's the head of engineering, what are their experiences. You really want to look at who works at the company. Okay, who those are just some of the most important things you can do. Okay, if a company isn't doing anything shady, I personally just write it off. You're gone. I'm not buying you. Okay, it's not worth it to be invested in a company where the people who are supposed to be caring the most about the company care less about it than you do. Never, ever, ever, ever. Look at earnings reports. Look at yearly end early earnings reports. What I like to do is I like to print out the 10Ks for maybe like the past 4 or 5 years. You should also look and see what kind of research tools your broker provides to you. Fidelity provides awesome ones. They show EPS for the past I think 4 or 5 years. They show what else? They show dividend growth year-over-year change. They compare that against the market. They show historic PE ratios. They show what else do they show? They give you a good easy access to any of the company's investor pages or financial reports. If you're ever confused about finding a financial report for a company, just look at their investor relation page. Another important thing I do is I look and I see what some select people say about the company. I don't care about what most people care about the company or analysts or whatever, but Fast Graphs, I can afford their tool. I will definitely be investing in their tool. But what I do is I go on their website. I see or not on the website. I check their YouTube channel to make sure they have to see if they have a video on it. And I can see what the historical PE is, what the revenue grew through time. Fast Graphs is awesome. I would totally get it if I could afford it. There's a bunch of aspects of investing. Besides the financial valuation, for me personally, I'm a dividend investor. I look at current starting yield and dividend growth rate. I like to actually purchase stock based upon kind of like a REIT, where what do REITs is it like cash available for CAFD, cash available for distribution. I look at dividend companies as dividend stocks first. So I like to see the dividend payout ratio, the year-over-year change, is there low debt, etc., etc. I like high starting yields, so I compare it against the industry. I look at the PE. But besides that kind of stuff, you have to know what are the upper opportunities. Okay, you're looking in this company, you're learning a lot about this company, but is there something better? That happened to me recently. I was looking heavily into purchasing Lockheed Martin stock, but at the same time I was doing heavy research on BlackRock Capital, because both of them were at their 52-week lows, and I had to analyze both of them, right? And in the end, I decided on BlackRock Capital because it had a lower PE ratio, had better dividend growth rate, had had higher revenue growth and profit growth. Maybe not profit growth, definitely revenue growth. It was in a place where it had less debt. I decided on BlackRock Capital because of those reasons. Okay. You have to make sure that whatever company you're buying, like I said earlier, has to, because when you spend money, when you buy a stock, you're not buying another stock with that money. So keep that in mind. And the last, most important one is, what are your strategic imperatives? Do you want to retire on dividends? Do you want to hit that next stock that goes up 200%? What do you want to do? And you have to make sure that whatever company you're analyzing fits within that sphere. I was an investor in Tesla. I owned the shares for like a month, but throughout that month, I bought at 270. They went up to like 360. I thought, you know what? I don't like the fact that this company doesn't pay dividends. I don't really care. I don't feel good that the stock price went up. I don't care. This company could go 20x, 10x, 5x, 3x, but I don't really care. I care about dividends. So I decided to sell it, and I bought some Apple stock, right? So you have to make sure whatever companies you hold or the company you're considering buying, it fits within the overall strategic picture. And that is my 7-step process from investing. I'm going to probably change it over time. I'm probably going to get better at doing the evaluation part. And obviously, as time goes on, I learn more about the companies. But that's my 7-step process. I really hope you enjoyed the video. Thank you very, very much for watching. Akuma out.